the most interesting thing about it to me is that we know that when Bitcoin runs, it runs hard. And you had this whole year, basically, we were just consolidating over the inauguration day high of, what was it, 110, somewhere there. We're going to break here and we're going to go higher. And I think this persistent services inflation, which there's signs of it picking up again, is going to keep us closer to 3% than 2%. And what is the Fed going to do in that environment? Is the Fed really going to cut in the face of that? I know they're getting browbeat, but that in some ways makes the problem worse. So really fascinating here. I think the overall TLDR is that the recession risks are totally overblown based on the current data.
Hey everyone, welcome to the show. I'm here with the Mastermind discussion. Everybody is smiling and laughing because they were all here waiting, and I thought this show was happening in an hour from now. So we are literally on the fly, making this up as we go. Just a very candid conversation, and this is how this is usually done anyway. I come up with questions, and we don't even go to them. We talk. So where do you guys want to start off? I think I know where you want to start off, but where do you guys want to start off?
New all-time high.
All-time high day. It's all-time high day.
Yeah. You guys told me that when we first met, and I didn't even realize. Any thoughts on that? Any thoughts on the all-time high?
You know what's great about an all-time high day is it's just this special moment in time where nobody has ever been wrong about Bitcoin. Nobody ever in the history of Bitcoin has ever been wrong about Bitcoin. Now that's going to change. We know that. But for right now, we can savor the moment.
Yeah. The thing that's exciting about it for me is that Bitcoin, since really launched the ETFs, it makes it to all-time high, goes on a run, it goes up to a new level, and then it's consolidated for several months before breaking to a new level. And for as long as I've been in Bitcoin, I think it's trading very differently. I think it's trading in this massive range where there just aren't a lot of sellers. There are people steadily and in a very persistent way accumulating Bitcoin, and then we launch higher. And then we'll probably consolidate there for 3-4 months and then launch higher. And I think we talked about one of the prior podcasts, whether the cycle theory will die to some extent, the halving cycle. Obviously, we can have drawdowns that can happen, but that's really interesting. We're getting to that point here. We're in, Q3 now of 2025. So it's interesting.
Yeah. It looks kind of dead, doesn't it? The cycle theory. We're trading like NVIDIA or something.
Yeah. I mean, we could pull back, of course, anytime, right? All markets pull back over time. Just the question of this predictable 4-year cycle.
I've got a theory on why I think that's why we're seeing these ranges kind of take place. But before we go there, Jeff, any thoughts on the all-time high?
Let's go. All-time high. More to come. Well, I don't know how much we want to get in here, but I want to hear your theory first, Preston, but I'm very bullish, so I'll tell you why. But let's hear your theory first.
I just think the trading ranges that we're seeing, it just hung around this 110 to call it 90K range for what feels like 6 months or so if we've been here. I think it's the ETFs causing this. I think you got a lot of options that get constructed over, you get a big ramp, and then all the ETF owners that are here that are much more tourist-like than long-term holders or whatever. And then you have all the options on top of it that are just building these resistance levels or bands kind of around where it just moved to. So let's say this thing would run, and I'm just going to throw out numbers here. Let's just say it would run to 140 pretty aggressively. You might have some bands that kind of get set up maybe around 150, 160, and then maybe down at 130 or whatever. And it just kind of goes sideways in that range for a few months before it kind of pops through maybe another level. Yeah. I don't know if this is the new norm or not. I suspect it has something to do with the ETFs though, because they're so big. These things are growing like crazy, way beyond what I think anybody anticipated when they launched, a year and a half ago now.
Yeah. Well, the other thing too here is, just to piggyback your point, Preston, is I think that Wall Street traders, institutional money has a totally different view of the RSI than people who are crypto traders or Bitcoin traders. And in Bitcoin, we're used to the RSI running really hot during bull markets. And I think that the Wall Street guys see that getting up into the 70 range, and they start getting pretty squeamish, and they want to take off, trim their position, right? And so I think that's a bit of a self-fulfilling prophecy because those guys are the big money sitting at the table right now. And so it's trading a little differently than it used to.
Just for people, the RSI is your relative strength index. This is a technical astrology for men. Yeah. This is a technical metric that is really popular, especially for fast money on Wall Street. And they're just looking at it and saying, hey, this thing's getting overheated. So let's go ahead and start lighting up on the position. And that's to HODL's point there. Anything else?
It's basically, like Preston said, it's a measure of how overheated the market is. And they believe that a market is overheated much sooner than the typical Bitcoiner believes. The typical Bitcoiner is like, what do you mean it can't be overheated? We haven't even seen a bajillion % this year. Like, still many multiples to go.
So you guys clearly haven't heard my 3-burner theory about how the Bitcoin price works in a bull market. So I'll just lay it out here. I talked to Danny Knowles about this a little bit. But here it is. So imagine, if you will, the price of Bitcoin is a pot of soup on the stove. And underneath that pot, you have 3 burners. Okay. Burner number 1 is global liquidity. Everybody knows about this now. Everybody literally and their grandma is talking about global liquidity now. Nobody knew about it a year ago. Now everybody talks about it. Burner number 2 that affects the price is the economy. You got to have economy that's revving up. And when that starts to heat up, that's a second burner to get the pot boiling. Burner number 3, which comes towards the end of a bull market, is leverage. So when everybody is just feeling wild and animal spirits are going, everybody starts applying leverage. So far, all we've had is burner number 1 going at a pretty good rate. The economy, as you guys probably know, has been stuck and kind of muddling since 2022. We haven't really recovered. Manufacturing has basically been below 50, at or below 50 since 2022. Services have held us higher, and we're a services economy. So that's been sitting kind of in the 50 to 55 range for a couple of years, and that's been propping it up. But it's still weak, and this is still a very unusual economy, which I still think goes all the way back to COVID and the response to COVID, what happened there, and all these kind of things, that these interplays with this central intervention. So anyways, what I think is going to happen, okay, and Joe, I see your smile, so I want to get your response to this. Liquidity is rising. I think that in the second half of this year, so basically starting July through December, we are finally going to see the American economy take off, and it's going to start ripping. And I think the global economy will follow, actually, and it will be a strong second half. And when the economy is booming, that means businesses are booming and are flush with cash. It means people are employed and making decent money and have money to save and invest and speculate with. That gets burner number 2 going. And then the animal spirits start to pick up. And I still think there is a chance that we have this rip higher, where we have that exponential hockey stick higher now. And then one interesting thing that I'm still waiting for, there's a chance it can still happen like it has in the past, where we have these traditional kind of 4-year economic cycles, and we get this by the 4th quarter of this year, and it kind of melts everybody's face off. That's possible. But what it's looking to me more like is the economy is actually going to stretch into the first half of 2026, and we're actually going to have an extended cycle. So that's based on the forward metrics I look at. I think that's what's going to happen in this. So we're probably going to be talking about all-time highs somewhere in Q2 of 2026 now, which is a surprise to me.
Yeah, that sounds about right.
Joe?
I couldn't agree more with the latter part. I think there are signs here of green shoots all over the place with the real economy. And I think that the yield curve is telling you that in particularly the 30-year, we're rising. I think we're heading down at 1.5% now with 30-year yields are rising across the board. And to me, I think what you're seeing is you're seeing structurally higher nominal GDP and consistent inflation risks across services. I think the inflation swaps are starting to rise. I think you see crude and copper starting to rise. And recession fear is completely still. I was looking at the Goldman's index that has 35% probability of recession. That's way overblown. There's just no evidence of that. It's nowhere in sight. And, for whatever reason, we've had this risk-off atmosphere. And I think the rise structurally in yields, personally, right here, I think is a reaction function to the big, beautiful bill, to the stimulus that's coming into the system, to the fact that the recession risks were overblown. You got to remember, if you flash back 6 months ago, people were talking about Doge somehow magically cutting $2 trillion. I don't know where that was coming from, but seemingly smart individuals on FinTwit were talking about that actually being real. It's not. I think it was completely fabricated. I don't know why people got that in their mind. You were talking about there being a massive reduction in government spending overall outside of Doge. And what do we see? We saw the fact that was largely abandoned at a failed effort on Doge. And we see now the big, beautiful bill, which is going to continue to drive consumption and potentially cause this boon in the economy that we've been waiting for, some catalyst. Now, is this a problem that it's being driven by the sugar high of additional spending? Yes, but it's not a problem now. And it's not a problem in early 2026. And to me, to Jeff's point, right, if you're an investor or you're positioned, I fail to see the bear case here. Obviously, any black swan can arise. There can be something totally off the radar that it's going to have to get priced into the market. But, this idea that we were just going to collapse the economy and that it was all going to be take your medicine with tariffs and attack on the consumer and reduction in spending, And none of that's really materialized. The tariff, it was largely a negotiation tactic, and it's been walked back. Even now, the market, like today, new tariff headlines, the boogeyman tariff, it's like just shrugging it off. It's not just Bitcoin, guys. NASDAQ has made a new all-time high today. The S&P 500, all-time high today. Bitcoin breaking out. And the most interesting thing about it to me is that we know that when Bitcoin runs, it runs hard. And you had this whole year, basically, we were just consolidating over the inauguration day high of, what was it, 110, somewhere there. We're going to break here and we're going to go higher. And I think this persistent services inflation, which there's signs of it picking up again, is going to keep us closer to 3% than 2%. And what is the Fed going to do in that environment? Is the Fed really going to cut in the face of that? I know they're getting browbeat, but that in some ways makes the problem worse. So really fascinating here. I think the overall TLDR is that the recession risks are totally overblown based on the current data.
Yep.
Holy bull in the house.
Yeah. I mean, listen, I think this is an absolutely exciting time to be long risk assets across the board, but especially with Bitcoin, because we've got every catalyst in the world. We've got massive Bitcoin Treasury companies, which I'm sure we'll get into, sucking up Bitcoin, planning to buy Bitcoin, getting in the marketplace. We got a frenzy on that. We got Bitcoin, I think, structurally undervalued here. We look at all-time high, and sometimes we get this natural PTSD, like, oh, this seems a little weak. I think it's the opposite. I would be curious, Jeff, your thoughts, or Preston or HODL, like, do you really feel like there's leverage in the Bitcoin space right now? I feel like there's a complete lack of leverage.
Right. That's what I'm saying. That burner hasn't even turned on yet.
Yeah.
Yeah. We're not even close to the exciting part yet of a bull market. And I think, to you guys' point, just a few days ago, I don't post very much on social media, but on Nostr, I posted a little thing of a reverse head and shoulders pattern that I've been watching play out with Bitcoin. And we're pretty much there right now. So with the price at about 112 to 113, I think it taps on the door and then it shoots higher. And I think we'll be at 140 to 160 before people can blink. And so people who are sitting on the sideline waiting for it to pull back again, I think they're out of luck personally.
So I want to talk about a point that Joe brought up about how there's been this massive policy shift. You started off the beginning of the year. Elon was supposed to go out and trim $2 trillion. He backed it down to 1.5. And Bassett was supposed to raise a bunch of revenue through the tax adjustment to the tariffs and all this. That was the plan. And all along, we had a conversation early in the year, and we were like, there's no way they can do this without offsetting it and still printing the money and inserting it into the system. If they pull out $2 trillion worth of liquidity in the system, they have to still print it somehow and get it in there, regardless of like how much they're saving the government and doing all these things. And sure enough, that's exactly where I think the Trump organization found themselves. And I had a conversation with Luke Groman. He was like, this is the biggest pivot I've ever seen in an administration where they're basically saying, I mean, look at this bill they passed. I heard rumors that Elon and Bassett came to blows in the hallway. I'm sure that I don't know if you guys heard any of that or what you've heard, because that Elon he was given a fool's errand. At the end of the day, he was given a fool's errand. And it's so ironic to me. This guy's the richest person on the planet. And yet he doesn't realize that this entire game is rigged. It doesn't matter who's in office, which party's in office. They're going to juice the numbers because they have to keep the economy flowing and that you don't get credit impairment. So, guys, what are your thoughts on the pivot? And I know you think it's going to just rip into the end of the year, and I agree. Any comments on that or the pivot and maybe the implications of it anymore?
Well, I'll just say, I don't think it was just rumors. It was like there were published articles about how Elon hurled his body into Besant's rib cage and body checked him like hockey style. But yeah, I mean, this is good intentioned people, well-intentioned, going into a situation, hoping they could fight the institutional inertia to spend more money and just running up against a wall. You're taking some of those successful, innovative people currently alive across many different domains and subject matters, and they're just running into realizing just how incredibly difficult it is. And then the administration, who desperately wants to make a deal and acknowledging, like, look, name a better deal that we can get through the Congress. This is how screwed up the system is. Congress is so broken. We have to make all these sacrifices when what we're doing is effectively just agreeing to what we had before with slight incremental changes, the slightest change in the world, even with the best of intentions. So to me, it's got to be frustrating for those guys, because I do think they went in there thinking they could cut out a lot of fat, but unfortunately, it's a tall order.
But it seems like they're looking at, okay, we have to print in style. We got midterms coming up. And they're looking at Bitcoin, and I think they're all in, man. I think that they're looking at Bitcoin as the only thing that actually solves all of this, and they're loading their personal bags. Is my impression. Do you guys disagree with this?
No, I think that's 100% accurate. I think it seems to me like everyone on Wall Street, everyone in a powerful position is like exactly like you said, just simply loading their bags. I had a friend call me. This guy's a pretty wealthy guy. I used to work for him back in the day in my 20s. And he called me. I had convinced him to buy 5 Bitcoin back in 2018. And, he had gone from, he put in $20,000. It's at like $500,000. And he called me and he goes, hey, we were sitting around talking about Trump and everything that's going on. And we decided finally, after all these years, you're right. And we put 25% of our net worth into Bitcoin. And they're 8-figure people. So it's a significant position, right? And I think that everybody has now, once Bitcoin crossed $100,000, the psychological phenomenon or effect that occurred was everyone now default believes the Bitcoin story. Mm-hmm. Everybody believes that Bitcoin is going to millions of dollars a coin. That's a very recent and new phenomenon.
I don't think everybody believes that.
I think they do.
Many people do.
They just don't admit it.
I think everyone believes it. Like deep in their heart, they know it's about to happen.
Even the critics? You think even
Peter Schiff knows it. He's on the board. Dude, it's an open secret. Peter Schiff has got positions on the board of, different crypto companies and come on, everyone knows it. It's like the Iron Sheik, right? Like he's playing the heel. Schiff is out there playing the heel. Like America, that's what he's doing.
I mean, Joe, to HODL's point, I've heard a lot of hardcore critics that will say something to the effect of, it might go to 1 million, but that doesn't mean that it's going to end up being successful or something. They just acknowledge that it's possible that it's going to 1 million, but that it's somehow going to fail at 1 million, what are we at? 20 trillion at that point?
Yeah.
Yeah. But don't you think that's just saving face because they've been wrong for freaking forever? They still they don't want to try to call a top anymore. It may go. I mean, I've heard Michael Green say something like this. He's like, oh, it could go higher. I'm not going to bet against it. I'm not going to short it, but it'll, I think that's just saving face. I don't think they actually believe it because they would position for that. If they actually thought it was going to $1 million, they would put more money in.
Take the most staunch critics in the world out, right? Because that's a very small portion of the population, the intolerant minority, right? I think that the average person believes that Bitcoin is going to millions of dollars a coin. And that is something that obviously we were all laughed at and called insane for saying things like that. And now that is like a default assumption. So everybody believes that the Bitcoin story is going to happen. The only thing going on in the minds of retail participants is they don't believe that they are going to be a participant in that story for whatever reason. I missed it.
Mm-hmm.
Yeah, I missed it. It's too expensive.
Yeah.
It's for other people that are more well off, and they just write it off as I missed that boat.
And then that brings us to the treasury companies, because the treasury companies say to the person who has this psychological effect where they go, I missed it. No, hey, here's another opportunity. This is a time machine to 2017. Step in, young man. Let's go get you your Bitcoin. I mean,
it's crazy.
The comments that I see online in reference to the treasury companies is just asinine.
All of it. All of the discourse is bad. Yeah.
Really don't understand security analysis. Yeah. Now, is everybody going to be MicroStrategy? Absolutely not. But there's going to be some companies that exercise this strategy that are going to crush it. They're going to absolutely murder it. And something to Jeff's point that you made earlier in the show about these 3 burners, I would maybe even make the argument that there's a 4th burner, which is just liquidity pipes into Bitcoin, right? The plumbing that is now being wired up into Bitcoin, and one in particular is just preferred stock. So this is a market that was just really small in the grand scheme of things relative to debt markets, to credit markets. And I think that the plumbing on this is just getting opened up. And I think it's going to become a massive market in the coming 10 years, massive.
Mm-hmm.
One of the reasons why is convertible debt creates this situation where it puts resistance levels into the common stock based on assuming this whole treasury strategy thing gets way bigger than it is right now. That's what I think is going to happen. I think it's going to get way bigger, monumental in size in the coming 10 years. And when you're looking at how convertible debt sets up like this delta hedge situation on the common stock, you put these resistance bands in that make it hard for the MNAV on the company to run. But when you do it with preferred stock, perpetual preferred stock, where there's no end date for the call on the principal of the initial issuance, you don't get that. And I think MicroStrategy has figured this out, and I would be really surprised to see them do much more convertible debt issuance because of the issues that it kind of creates in the options and everything. And all basically it sucks all the volatility out of the common stock every time they issue this. And they don't want that. They don't want that at all. So I see this market, this preferred market, getting so much bigger. And I don't think your everyday, I think most people don't even understand preferred stock. If I have a conversation with 100 people off the street, I think there might be 1 or 2 that actually even understand what preferred stock is. And I think this market's about to get really big.
Yeah. I think, in fact, if you can kind of look at what Saylor is doing as him building out his own yield curve, and he can go up to, I believe, this is speculation, but I think he can potentially go up to the CAGR of Bitcoin, which means there's a lot of room there to build that out using those preferred structures. And then you're right about the treasury companies. Not all of them are going to, here's the nuanced opinion, because you're right. People are out here. There's all this paper Bitcoin discourse on Twitter and everything, which is very fun and colorful. But I'll give you a bit of a nuanced opinion / prediction, which is I think the treasury companies are a real thing. They're a real phenomenon, and they're going to live large in the world over the next 10, 15, 20 years. I also think that we're in the infancy of a very large bubble, a bubble that could be like .com in nature.
In the short term.
In the short term.
Yeah.
And that's over the course of like maybe 3-4 years.
Here's the distinction in my mind, HODL. So largely, I would say the companies that have begun and grown and had traction as a Bitcoin Treasury company, I would say they've done it in a responsible way with both their debt issuance, with their share issuance.
I would say so.
What tends to happen in frenzies and in the short-term, things that attract a lot of attention, flavor of the month type strategies. I'm not saying this is, but I think at the beginning you could have entrants into the marketplace that move out on the risk curve. They start to do riskier things to acquire Bitcoin, and that's where it really gets introduced. I don't think we've even seen that yet, but somebody is going to come along and say, well, they're having such success if we just tweak a little bit, if we just take on a little bit of debt that's at a higher rate, or play a mildly different strategy, that's where you introduce the real contagion risk. So that's, to me, what I'm on the lookout for. That's the sign of overheating.
Joe, to this point, I think that a lot of the amateurs that come in and try to do this, they're going to think that they've got to provide better value in the issuance than MicroStrategy. But what I think is going to be discovered with enough time is that the smaller the company is that's implementing this without a whole bunch of operational risk behind it, okay, is actually more desirable to the market participants, because as a percentage of how much more Bitcoin they can stack relative to the treasury that they have, it's going to yield way bigger and better results than the behemoths. And what's fascinating about this is it's almost like the laws in nature where the animal can only, like an elephant can only get so big, right? And then it has a disadvantage because it's too big. You have the same dynamic, I think, that's going to play out for these treasury companies. And so I guess what I'm saying is you don't have to, I don't think that the people implementing this strategy really need to go out there and offer way better dividend yields on, let's say they're doing a preferred issuance. I don't think it has to be all that much better than MicroStrategy for it to be desirable to the market, because especially if there's a callability piece to it, they're going to have a lot of buyers, I think, that are going to want the issuance, because I think that the yields that the underlying will perform at is going to be pretty good. And I see, Jeff, you're nodding. You seem like you agree with me on that.
Yeah, and I agree with that. And I have like multiple points about this. Is I think that several of these newer ones, probably, I'm sure there's some we haven't even heard of yet that are coming to the market soon too. I think they have great potential to outperform MicroStrategy, who is the founding father of this strategy, in the bull market. But I will be watching very closely as a fund manager for who is putting on the most leverage late in the cycle, who is hyping up on Twitter and all the social media accounts and talking about how awesome they are. I will be watching them closely because they will get absolutely wrecked in a bear market. If we get a bear market, if liquidity pulls away, if the economy turns, these are like basically the same thing that happened to miners in 2020, 2021. We saw some of these miners that were the best performers during that cycle that they put leverage on late in the cycle, and they paid, and lots of them went bankrupt because of that. And I think that same thing is going to happen this cycle.
So,
Well, the tell's the bond issuance. It's not the equities. You got to look at the bonds. I mean, that's going to be the tell, I think, because those bonds will trade pretty ugly before the equity collapses, I think.
Yeah.
it's another interesting dynamic with all of this is when you look at Metaplanet and you look at the MNAV that it's trading, where is it at right now? Like 8 times? It's
Something nuts. Yeah.
something like that.
Yeah, I'm not sure.
Let's just, for simplicity, just say that it's like 8 times. So if they go out there and they raise $100 million, they can basically go buy the Bitcoin as if it's on sale for, call it $30,000 right now, instead of it being $110,000.
Right.
It's real ballpark numbers, right? And if you're buying it for 30,000 and today in the market it's worth 110, and let's say we have an 80% drawdown, they basically bought the Bitcoin at the drawdown level. And so from a risk standpoint, these companies that have the really high MNAV that are exercising and buying all this spot, they seem like they're going to be able to weather the downturns more easily. I see Joe literally.
It depends on what they have to pay, right? It depends on what obligations they're writing.
Yeah.
So
It's all about it, how the debt is encumbered. Exactly.
Yeah.
Like, because they're all adopting, Preston, this strategy. They're like, we're never going to sell the Bitcoin. We'll see about that. Like, once you have to meet your obligations, that's the now MicroStrategy. I think one of the reasons why, I think to Jeff's point, right, it trades where it trades is because he's put in place a system where it's I think it would be very likely that he's a forced seller. It almost, to me, I can't even envision a circumstance. Even if Bitcoin were to fall 50%, he wouldn't be a forced seller.
No.
Just look at what they got out there. I don't know. Do you disagree, Jeff?
No, I don't think they will ever have to sell. Not during Saylor's tenure. Anyways,
I mean, I think if you add up his interest expense and all of the dividends, even the ones that he doesn't have to pay because they're non-cumulative, I think it's $200 million a year.
Right.
It's a pittance compared to like even if you have an 80% drawdown, he can continue to do that. Not to mention he can just do more issuance and come up with more cash to make the payments.
Anybody in here think it's going to make the S&P 500 right now? Hot take?
Yeah.
This year? You think
I
he
think
is?
so. Yeah, I think so too.
Put me as a no.
I think the S&P is in a situation where if they don't include it, they're at risk of being undesirable from just because you got such a fast rising star in the mix. If they don't include it, people are going to be like, well, I'm not owning that. I want to own whatever else.
Well, they shut out Tesla for far too long.
Yeah.
I mean, we know that, right? I don't know. Jeff, you didn't weigh in.
I'm 50-50. I don't have a strong opinion on it. I don't know anybody on the panel, so I can't.
This is the point of indexation, right? Like the indexers, in some sense, win again because eventually it will get into the S&P 500. Now, if it gets in this year or not, I don't know. But eventually, even you agree, right, Joe?
Eventually. It's just
So the Bitcoin is going to come to where you are if you're an indexer, and you're not going to get the same returns that the early guys like us got, but you're going to do okay. Like you're going to be all right. I think that's very important for not just Bitcoin, but the markets broadly and MSTR stock. But, the markets broadly are going to be buoyed by the amount of Bitcoin that Michael Saylor is holding.
Good Lord.
Do you guys think that, so slight switch of subject, but because I brought it up, do you think Bitcoin miners are going to catch any sort of a bid this bull market?
I'm still holding a small bag, but I'm not that hopeful.
So good, Joe.
I think a lot of the miners are becoming treasury companies is really what's going on.
Well, if you spend any amount of time on Twitter Spaces with Mike Alfred, he'll tell you they already have, and he'll cite his favorite example of a stock, which I'm not going to name for obvious reasons, but there have been a few of them who in recent weeks, just looking at one here, it has pumped 300%. That's not a bad bid.
It's pretty good.
Great.
Yeah. I have a diversified portfolio of miners, which means that some of them are up 300% and others are down 99%, right? It's diversified.
I don't like the miners. I don't own any miners. The main reason that I like when I'm looking at it, can they implement the ones that are public, can they implement the same thing that Michael's doing? They can.
Yeah.
The issue is they have this operational business with extreme risk relative to the treasury. In addition to the other risks that we were talking about as just far as meeting interest rate or interest expense and dividend payments if you're issuing them in a cumulative way. So why would I own that versus something that doesn't have all that operational execution risk and liability, especially when you look at how much of a cutthroat business all of that
Right.
is. So
Hugely capital intensive. By the way, I like Mike Alfred a lot. I'm not knocking him at all, but I just feel like miners were the flavor of the last cycle. And it's hard for me to see how they catch a sustained bid this time around, personally.
Yeah, it's gonna be treasury companies this time around.
Yeah, I think so too.
I actually personally believe that the treasury company bubble can get, like I said, .com level large, which was $11 trillion in that era. Because basically when you have this big type of bubble, it's like around an idea. The .com bubble was around the internet. And it was like the thing I said earlier. Everybody now believes in the Bitcoin story. Well, in 1996, everybody believed in the internet story. They just weren't really participating. And then the fever caught them at some point between 97 and 2000. And suddenly everybody and their mother was in on the thing, right? And like every idea that was possibly going to happen on the internet had a company that was associated with it doing a rudimentary or crappy or fake version of that idea in 1996, right? Like broadcast.com. I mean, yeah, it's a big deal that we all watch on the internet, right? But we don't watch any of Mark Cuban. But Mark Cuban got paid a lot of money for that idea. And I think same thing with the treasury companies now is that the big idea is Bitcoin. Everybody goes, Bitcoin's going to happen. I missed it, but it's going to happen, right? And we're in the infancy of this bubble. And what's going to happen, I think, is that the treasury companies need to differentiate themselves. Because if you look at XYZ Treasury versus what's the difference between Nakamoto and CEP, or sorry, Jack Mallers 21, or the MetaPlanet, or this or that or whatever, you need to have a credible story about how you're differentiated from your competitors. That credible story is going to be something about Sats flow, Bitcoin specific businesses, how you generate Bitcoin capital. Oh, we're doing it on the Lightning Network. Oh, we're doing it over here with insurance. Oh, we're doing it over here with this. We're doing it over here with that. And like pets.com before it in the .com bubble, a lot of these ideas are going to be real ideas that will happen in the future. Pets.com later became Chewy, which sold to PetSmart for $3 billion. But in the interim, we have no ability in 1997 to ship giant bags of dog food through the mail, through the U.S. Postal Service, right? So like there's missing infrastructure that's going to cause some of these ideas not to come to fruition, but people are going to want to bet on them now. And that's the thing that's going to cause the bubble, I think, because everyone's going to get really excited about the internet of money, Bitcoin, the future of where this is happening. And that's why I think, like Jeff was saying, we could expand into Q2 of 26. Dude, I think we could be a 3 or 4 year run with like a slight lull in between that takes us up to beyond $1 million.
Well, because of the dynamic of if these shelves that we're talking about, like it gets a run up and then it goes sideways for 6 months and it gets another run up, maybe the derivatives market is preventing this euphoria from really kind of creating the 80% drawdown and the massive run up. I mean, when you look just using power law, and I'm not saying I'm like a huge promoter of this power law stuff, but when you look at the price action, I mean, it is just going right down the center of that model. It's not going out to the extremes. Now, whether it stays there or not, I don't know. But I find it interesting that it's just running like this really clean path right down the middle of the model right now.
Yeah, and for me, I think the deciding factor will be if the Trump administration is able to successfully rev up the economy, and especially if they can overheat it, then I think we see it start to rise significantly above that line where it can go exponential at that point.
Yeah.
That's my take.
I have the chart here somewhere. I have no idea where I put it on my desktop. Anyway.
I also think there's a potential future where you could have a massive bubble in treasuries with a more stable, steady power law like climb in Bitcoin itself. And I'm not sure which of those futures plays out.
A bubble in treasuries?
Yeah, in Bitcoin treasury companies.
I thought you meant treasuries. U.S.
Sorry. Bitcoin treasury. I have a very Bitcoin-centric worldview.
I had the same reaction.
Regular treasuries don't mean anything to me.
I mean, like there's a bubble in treasuries right now. What are you talking about?
Right. HODL's all in on treasuries.
I'm like, why would you guys invest in that? We're talking about boomer money. Like, what the hell?
Love it.
What if you could grow your wealth effortlessly with a consistent income stream and in a tax-advantaged way? Bitcoin mining with Abundant Minds checks all of these boxes. Abundant Minds delivers a premium, hands-off Bitcoin miner hosting solution at renewable-powered facilities in Oregon, offering low-cost energy, industry-leading uptimes, and white glove service. Your investment works harder for you so you can stack discounted Bitcoin without the headaches of active management. Their cool and stable climate extends the life of your machines, and if repairs are needed, their team handles it fast and at no extra cost. With in-person exclusive educational events, you get unmatched transparency and insider knowledge. Successful entrepreneurs, investors, and investment funds trust Abundant Minds to optimize their mining profits with significant tax advantages. Get started today at abundantminds.com/Preston for a free gift as a listener of this show. That's abundantminds.com/Preston because elite investors choose abundance. Joe, do you have any policy or like Washington, D.C. update with the News Act and all that?
I promised HODL before we got on that I would ask him about his thoughts on stablecoins, which I was at the Stablecoin conference back in Vegas, and I wanted to make sure that we had sufficient attention paid to the stablecoin massive move. We also have to talk about our good friend, Tom Lee, and his new comment that Ethereum is the new Bitcoin, Preston. I really want to get your take on that, but we'll go to HODL first.
I didn't even hear this from Tom.
Oh yeah, did you? You didn't hear? He said on CNBC that Ethereum is the new Bitcoin. So your reaction?
Yeah, that's retarded. Oh wait, I'm not allowed to talk like that on Preston. No. That don't make a lot of sense, Joe.
Here's his thesis. Okay, don't yell at me in the comments, but I'm just gonna give you his thesis. Okay, so his thesis is as follows: he has started a Ethereum treasury company. And his thought process is that Ethereum, as the second largest adopted quote unquote blockchain, is going to be ripe for massive transaction usage as all these companies and financial institutions implement stablecoins. So for those that aren't familiar, we have a massive piece of legislation that looks like it's going to be signed by the president, the Genius Act for stablecoins. It's going to make non-financial institutions have a clear regulatory path to issuing stablecoins. So market participants are really excited about this. A lot of crypto companies are excited about this. And the bet that Tom Lee is making is that he thinks there's going to be this huge demand for Ethereum. And he thinks that that if he launches this Ethereum treasury company, he's going to be able to adopt the Saylor strategy. And then he's going to continue to increase his returns because not only is he going to continue to borrow and buy Ethereum, which will be needed for transactions, but he can stake the Ethereum, Preston. And when he stakes the Ethereum, it will only, in this perpetual money machine, advance his returns. Any commentary on that, reaction to that?
Does anything prove how dead Ethereum is more than the fact that they don't even have their own narrative this cycle? They had to steal our narrative. You couldn't do NFTs again? Like, what happened to monkey pictures, man? At least that was your narrative.
Can you believe that they were literally making pictures of JPEGs of rocks in different shades and selling them for 100,000. Like, how did that even?
And it may have, and here's the crazy part, it may have been a better investment than an Ethereum treasury company,
See,
Here's the power law chart that I was saying that it seems like it's just like running up the middle. There's a lot more time that would have to play out with it continuing to do that for that to kind of
looks kind of good.
Warrant the comment. Anyway, just throwing it out there.
So do you guys think, is there any situation, Jeff, where stable coins have any impact in the Bitcoin market? Do you see any positive catalyst for Bitcoin and the stable coin? Or is that just totally at the periphery, not even on our radar, not worthy of discussion?
Well, a couple of things. I think that it's expected from where we are right now in history. I think we're at a transition point, right, where we're phasing from analog to digital. We're phasing from fiat to Bitcoin. And I think that stable coins are the perfect sort of segue to get into Bitcoin from the analog world. So it's getting everybody digital, right? Get everybody on programmable money. And then you have the people like you can't deny, like Tether, those dudes, like, first of all, that's the best business model that's ever existed. I think that's inarguable at this point, at least to date. And they're buying a ton of Bitcoin and they're putting it on their balance sheet. So they're not stupid. They're sort of fundamentally Bitcoiners to some degree, at least, and they get Bitcoin. If I could create that business model, I would do that in a heartbeat, right? If I could give somebody a token for $1 and then buy treasuries and then just collect the interest and not have to pay anybody and then buy Bitcoin with that, I would do that all day, every day. So it's a great business model. So I think it's a natural segue into where we're going. I don't think that they'll I think Bitcoin is built to last. These will have a limited lifespan, probably of a few decades or so, is my guess.
Joe, don't you think that the U.S. messed up on the Genius Act with the part where they're saying that the issuers can't pay the interest of the coupons to the holders of the tokens.
Well, mess up in the sense that they're going to be shut out of many markets abroad. Yes.
Yes.
I think that's true. So just for the benefit, and again, I'm sorry, this is not cool in the Bitcoin podcast, but I think it's fascinating because what it's showing is this, the massive lobbying power of banks, because the banks fought very hard to prevent the yields being transferred in any way given to customers. Because keep in mind, the stablecoin applies to non-financial institutions. What does that mean? That means if you're not a bank and you're launching a stablecoin, you have to abide by the Genius Act. It does not apply to banks issuing stablecoins. So you may have noticed in the news about JPM, and so you have a question, but JPM, for example, could launch their stablecoin and pay yield. There's no prohibition on that. Yes.
That's crazy.
That's why I'm here, dropping the alpha.
Wow. Now, what's going to be interesting is that's going to be a bloodbath of competition for the incumbent banks.
Yes.
And if you're not a bank and you're being forced to sweep the yield, the coupons, and you sweep them into Bitcoin, you're a way safer institution to use the coin. Like if you're not, and nobody's using these things for the yield right now. They're using them to get in and out of all their degenerate gambling in the crypto economy. So I don't think that the typical person that's using these coins are using it for the yield.
Correct. And then you also will have a bifurcated market because under the Genius Act, if it becomes law, entities outside the United States, so foreign issuers, for example, Tether, they basically have to subject themselves to a comparable U.S. regulator. They have to prove and get a permission to do the issuance. They have to abide by most of the major banking regulations and laws, which I am skeptical they will ever do. And the big one, they have to subject their entire organization to safety and soundness reviews from the Washington Stablecoin Review Board. So because of that, right, you're going to have these entities outside the United States that have to pick and choose. Do you want to access United States capital markets and play in the sandbox and know that your organization is now subject to U.S. jurisdiction, or do you want to stay outside? So my prediction is you're going to have this bifurcated market where you have Tether that largely stays outside of the United States, right? They're going to be continuing to be out there and trying to have penetration on both the trading vehicles, the Binances, and these different trading desks, but also locally, right? And to me, if the goal is we want emerging markets to adopt stablecoins, I think that, and this is just my view, I'd be curious, Jeff and HODL and you, Preston, what you think about it, but I don't know why you would be more encouraged to adopt a stablecoin that somehow has Washington regulation behind it. To me, if anything, if you're outside the United States, you'd want something that isn't subject to Washington, where they can't freeze the accounts very easily. They won't freeze the Tether. You want to get far away from the reach of Washington outside the United States as possible. That's just my read, but I'd be curious if you think that regulation in Washington would cause emerging markets to adopt it.
Well, what I find interesting is, because I didn't understand that, Joe, what you just said, but I find it interesting that Tether made the decision to start tokenizing gold in the face of what you just said. Think about it. That instead of buying treasuries, they're saying, okay, well, gold's kind of better than the dollar anyway. So why don't we just tokenize that for people that want dollar-like stability and performance? Is that why they started tokenizing gold?
I think it's definitely an effort to potentially still have access to U.S. markets.
Yeah.
And that's the key thing, because it's not dollars. Stablecoins is applying to dollar-backed or purported pegged tokens.
Yeah.
So it's fascinating.
Wow. What a play. But I think they messed up by, well, maybe, I don't know. Well,
it depends on who messed up, right? If you're the banks.
Yeah, that's what I'm saying.
The banks, why would the banks want there to be stablecoins that can pay yield? I mean, think about it. Think about the effect that would have on money markets. And money markets have systemic risk factors in our society, right? If money markets are just disrupted, that causes financial stability. The Fed is going to be on that very closely, watching if money markets get disrupted. And money markets have had issues before, historically. So I think there was an impetus to try to keep the yield part of it out. These can be rails and pegged tokens and these types of things. But once you start playing with yield, that really threatens the model of the banking sector.
So I got a question or a couple for you, Joe. So to me, based on this, it looks to me like, so Tether is going to remain ex-US. It's going to be the international option. And I think they're going to pivot to gold. And I think that gold stablecoin concept is actually going to rise and be very popular in the coming 5 to 10 years. Relatively, it's going to rise in popularity. Dollar will still stay popular, but gold will quickly rise. here in the US, it's basically Circle now, which is outside of the banks versus like the JPMD and the other bank stablecoins. How do you see that playing out, Circle versus the bank coins? Who wins that in the longer run?
I think it's going to be fascinating. To me, it's not just those two, because I think we track at our firm, I think there's 100 stables that have plans to launch or already launching. I mean, most of the major exchanges have some version of a stablecoin. Now, Kraken has a stablecoin, for example.
100. Joe.
Yeah. Yeah. But it's going to be like the ETFs, right? You're going to have this massive flood of a bunch of vehicles, and then it'll consolidate down to the few winners, right? It's like, think of it like a sport, right? You have to get market penetration. And to do that, you're going to have to figure out, how do I get this into the hands of customers? And ideally what you'd want is merchants to somehow incentivize people to accept the stables, right? Because stables are great for peer-to-peer transactions, but we know that a lot of people, they're going to take that and they want to buy things at Amazon, or they want to buy things at other retailers. So the key thing for me is, how do you get this to get outside of the crypto trading apparatus and used as medium of exchange? Credit card companies would have a very easy path to doing that. I have not heard credit card companies doing that. I'd be curious, though. I don't really see an avenue. I mean, I have a JPM account. I don't know why I would use the JPM stablecoin.
See, what I think is going to happen is, I think they're going to introduce them through, they're going to talk about, they're finally going to take on Bitcoin custody. And they're going to be like, okay, you want us to custody your Bitcoin? First, send your cash in here, convert it to the JPMD, and then convert some of that into Bitcoin. And then why not have a little bit of yield over here in the JPMD coin and hold Bitcoin, and we'll custody all of it for you. I think that's how they're going to introduce it.
Joe, are they doing this on Solana, Tron? Like, what are they using?
Well, JPM, I think, I just want to confirm this. I think they selected Base, this Base network, which I am by no means an expert in. HODL probably is all over that. He's probably got a ton of Base tokens.
He's based. HODL's based.
No. Totally. Bags of base.
Hold on, I got to figure this out. Go ahead, Toddle. What were you going to say? I'm going to do a little.
No, I was going to say is, one thing I've heard about the Tether guys is that they sort of have this worldview that China is going to be this perfected version of communism, that America is sliding into feudalism, and that they're building, they're essentially going to be the iron bank for the new emerging network state, which respects sovereigns. And that's a very large worldview, and it's crazy that they're actually in a position to do something of that nature. They could actually do that. They could actually pull it off. Oh, another thing on the stablecoin thing is, one reason, Joe, you tell me what you think about this, but I've heard that there might be a proliferation of smaller stablecoins under 10 billion, because under 10 billion, they're state regulated and not federally regulated.
That's correct.
So there's a reg arbitrage there.
Absolutely. And that's where you get this massive number, right? You're going to have these effective regional banks.
Well, there will be big winners, but you'll have these small regional banks that have their own.
You've got a great read on the consumer. Like, if a local bank is issuing and pumping up a stable coin, do you really think that has a product market fit? Do you think people are going to be like,
I'll give you a consumer perspective I was thinking about a little bit in regards to this, which is an expansion of the gift card industry, essentially in a way that, let's say I'm a normal family in the Midwest. I do a lot of my shopping at Walmart, and Walmart has a stable that they offer me, right? And so I park X portion of my check, direct deposit with Walmart into this stable coin with the money I know I'm going to spend at Walmart, and Walmart gives me huge discounts and incentives for doing so, because they can't offer me yield, but they can offer me crazy discounts and incentives. So
that makes a ton of sense, but don't you need the merchant buy-in? And this is the problem. Maybe they get that through. I don't know. That seems like it has to be merchant driven. It has to be Amazon, Walmart, major retailers that are saying you have to use this for some reason.
I think so too. Yeah, you need Amazon, you need Walmart, Starbucks, etc.
You guys ready for this?
Yeah.
Okay. So Base is an Ethereum layer 2 chain developed by Coinbase. I asked it, okay, so who runs the nodes of Base? And the answer came back, Coinbase is currently the sole sequencer node on Base.
Wow.
There you go. You only need one.
This is nuts. This is so funny.
Coinbase is just taking over the world.
I mean,
the non-Bitcoin world, right? They're like the Lex Luthor of the
exchange.
Brian Armstrong has been respecting Bitcoin lately.
He has.
Here's the quote.
Respecting Bitcoin again.
The quote, Preston: "We're thrilled to see one of the nation's most prominent banks come on chain," said Jesse Pollack, creator of Base and VP engineering Coinbase. Base offers sub-second, sub-cent, 24/7 settlement, which makes fund transfers between JPM institutional clients instant. We're proud to partner with JPM, and this pilot combines the credibility of JPM to help us bring institutional money into a global economy.
I mean, one sequencer, of course it's instant.
Hey, question. What's the point of Ripple?
Oh,
Isn't this Ripple's whole MO?
yeah, he's on the hill a bit, huh?
Oh yeah. Oh yeah.
Oh my God. This is such a, but you know what? I'm just thinking about all this through the lens of your typical person who doesn't care about finance at all. They see all this fancy language and terminology. Oh, it's a sequencer on top of the layer 2 of Ethereum. And just like, what a Rube Goldberg machine disaster of just terminology and nonsense. Total nonsense.
And the big problem is, okay, you have one chain, this base chain that's got one coin running on it. There's no interoperability because it's not across protocol. So you got like the entire ecosystem, like, well, I've got stables on Solana and Ethereum and Tron and all these. That's a mess. The consumer experience there is terrible. It's just absolutely awful.
Well, it's going to be such a walled garden that either you're a JPM client and they force feed you that you're now using their blockchain, but nobody's taking that thing outside of their ecosystem. There's
right.
To your point, there's no interoperability whatsoever. And like where this is all going is the one that's the most interoperable, Bitcoin, wins and is actually backed and has tens of thousands of people running nodes because they want to, not because they're being forced to. Like, I just don't know how people can't see this, man.
Do you think we get stable coins on some sort of layer 2 or some sort of derivative of Bitcoin? I mean, is there
Tether
eventually
doing it?
Yeah.
Tether's already made that announcement in January.
that they're doing stables on Bitcoin? Is that going to be, but not in the United States, right? Because
well, I mean, they're doing it on layer 2 Lightning. So, and you don't need a token to run it on Lightning. Yeah, I don't know. This is really interesting. And that was just JP Morgan. I can't imagine what you're seeing the others are using it for their quote unquote tech to run things.
I was just going to say, some of you guys are too young probably, but like in the 90s, the intranet phase took over for a very long time, several years. And that's what I think is going to happen with these stable coins, right? That they're going to spend tons and tons and tons of marketing dollars, and like what you're talking about, HODL, with trying to get you to Walmart here, give you all these discounts. Here's a Disney stable coin, park your money here, we'll give you cheaper tickets. And I think they're going to really push hard for about 3, 4, 5 years. And then it's just going to fizzle because they're going to realize it's not worth the effort. And then, because all roads do eventually lead to Bitcoin for sure. This is just this transition period that we're in.
Completely. I think the intranet is very analogous to private blockchains, and it will likely meet the same fate. And we've seen that with many different private blockchain projects over the 15-year history of Bitcoin. So yeah, all roads lead to Bitcoin, man. All roads lead to Bitcoin.
Can I change the subject?
Yeah.
And Preston, are you able to I don't know if you have TraderView or something, if you can get an XPX divided by gold?
XPX divided by gold. Okay.
And as long as like the longest term possible, 100 years, hit the all.
Let's see here.
This is what I can't stop thinking about, and I've been going on this for a couple months now. And my leading question to you guys is:
XPX divided by gold? Is that what you said?
Yeah.
Okay.
And if you do it on TradingView, you can go back to like the 1920s. And my question I'd pose to you guys is: do you think that the period of American exceptionalism, as people talk about, is it over for now?
No.
Are we? And yes or no? And I'll take the other side of that, Joe. I think it is. I think we're in a period, and I think this chart is very helpful in showing this, that I think that we've reached the point where the dollar strength, it's strengthened enough that investment in U.S. assets, financial assets, has reached a peak, and we're now rolling over, similar to 1929 and then into the 30s. Similar to the late 1960s and through the 70s, and similar to basically the dot-com bust through about 2011. And I think it's sort of shocking to me, at least, how well you can see these huge secular trends when you have like the S&P 500 divided by gold. And it looks very clear to me, at least, that we're at the start of that. Now we may reverse that and go back again. And I wish I had the chart up to show you.
I have it right here if you want to see it.
Yep.
This is the SPX over gold. This is a chart of the 1884.
Yeah. So the bars are monthly. Yearly bars. Can you do monthly?
You don't like the yearly? That's too big?
That's fine, but it shows the same thing, but I feel like you can see the waves a little better.
Okay. Hang on.
Either way, But you guys can see it anyways. So where that first peak is,
I'm gonna go to monthly. Here's monthly. Okay, there we go.
Then zoom out. Yeah, there you go.
okay. And you can see, so that first peak, that's 1929. That hump number 2, that's about 1968-ish. Peak number 3, that's the dot-com boom.
Dot-com bubble. Yep.
Okay. I think that we're at the almost the exact same period right now as we were kind of in the early 70s. And I will be very surprised if gold does not outperform US stocks, and if emerging markets and international stocks don't outperform most US stocks for the next 5 to 10 years.
Okay.
And I think Bitcoin and I think global assets are the place to be. And I think US assets in general are not the place to be, except with a few exceptions. Mainly AI, the tech stocks I think can still do well. AI, robotics, semiconductors I think still can outperform. But I think in general, US investors who are only in US stocks and US bonds are going to get decimated as in inflation adjusted returns over the next 5 to 10 years or so.
And
Tell me why I'm wrong.
My response is going to be look at VTI versus VXUS, which is what you're looking at. Actually, let's look at it the other way. The VXUS is the Vanguard total international stock market, excluding US stocks. And then there's a total US stock market, VTI. This is the chart, okay? And we're going to zoom out, as they say. This is the path of this thing. To me, this tells the whole story. Look, what you see repeatedly, you could have made the same argument going back, this is 2011. Here.
Awesome if you were able to see
here.
it back with the timelines that Jeff was.
Yeah, I
But
can't.
but you can. So 2011, notice that's when this starts. That's when the last bubble started. So gold last peaked in 2011 relative to stocks, and then it's been free falling since then.
It's rolling over here yet again.
Yep.
Okay. I expect it to make a lower low. And the reason is very simple. And you're going into an age where the companies that are dominating the artificial intelligence space are based in the United States. They're part of the U.S. capital markets. Yeah, I personally expect a massive productivity burst. I think nominal GDP is going to run a lot hotter than we expect. I think we can't even measure it correctly because of the technologies that our little rodent brains can't wrap our heads around. And because those are largely domiciled and have access to U.S. capital markets, you're going to have to own those things. Those things are going to print cash over the next 20 years. And the majority of the world's companies, although meaningful in having a competitive advantage on raw materials, they will need the AI. They will need features and the AI resources that will be based in the United States. So I find it very difficult that people, actually, I don't understand it at all, how people make the argument that we're going to have this massive boon, economic boon, where AI companies are going to drive productivity and just print cash effectively. And then they also think that we have the end of American exceptionalism. Those two things seem completely at odds with one another. Either the AI narrative is total fluff, and that's not going to transform and cause a productivity burst, or alternatively it is, and American equities and American investments, American stocks are going to do fantastic.
So can I counter that? So I think that I totally agree actually with almost everything you said. But I think the difference is AI will become commoditized and will diffuse throughout all markets, global markets. And I think all companies around the world, because you can be in Sri Lanka and you can subscribe to OpenAI if you want to, or whatever. And I think we're going to see the benefits and operating margins of all companies are going to massively improve. And then we also have robotics, right? Robotics is going to replace lots of human workers. It's going to cause companies to be more efficient, improve margins even further. But I think because of where the US valuations are currently, that we're going to see more margin expansion and margin improvement across the globe and throughout based companies. And so it's not just the AI companies that are going to make money, it's the AI tech itself is going to diffuse throughout the world and actually cause all companies across the world to do well.
Well, it'll diffuse, but the data centers, we're going to spend trillions of dollars over the next 10 years with data centers in the United States. Massive.
It's a massive CapEx. Yep.
In the United States.
Yes.
And yes.
Which is terrible for margins.
Sure.
Okay.
But it's terrible for margins, assuming there isn't huge amounts of stimulus coming from the U.S. government running structural deficits of 6 to 7% GDP and potentially getting bigger. So to me, that's going to be a nonstop cash investments. And you can do that as long as nominal GDP is running hot. As long as they're telling you the strategy. Besant came out and he
Right.
told you, we're going to run this economy hot. How do you run an economy hot? You run it hot by effectively borrowing a lot of money and pumping out a huge fiscal impulse. That is the nothing stops this train. That is the massive. Go ahead.
Totally agree. But so is the rest of the world doing that.
They
Everyone
can't compete, though. They're not going to be able to compete.
It compete in what? Just AI tech, you mean? Because we're behind?
On the data center front.
I'm saying they're going to compete they're going to be doing even more relative stimulus. They're going to be pumping more currency into their markets,
which will get converted to dollars. That's the dollar milkshake theory.
So I disagree with that. I think we already have reached the period where we're going to have basically 10 years ish of declining dollar value. I think the dollar is going to get weaker over the next 10 years, not stronger. So this remains to be seen. We'll have
just to be clear, when we're talking about the dollar for the audience, we're not talking about the consumer prices that are people paying, the cost of goods and services. What we're talking about is the relative foreign exchange value as measured. I think most people use the DXY as a proxy for currencies. And the problem I have with the argument is that most of the major lending still to this day, even after the Russian sanctions where people says, oh, everybody's going to flee the dollar, we have more transactions going through dollars. We have more credit creation that's denominated in dollars, regardless of the settlement mechanism. And I fail to see how that structural dynamic is going to change. Unless you're going to get the entire Eurodollar system to start issuing more denominations of credit in other currencies, which I can't really find one other than maybe Bitcoin, which maybe that transforms things and disrupts it. But then are they going to do it in the ruble? Are they going to do it in the yuan?
Gold,
renminbi?
I think gold and then Bitcoin are coming. And I think gold is already rising quickly as a reserve asset. It's the second largest.
For credit creation?
Not for credit creation, but I think that's also coming. I think the world is shifting from U.S. dominance to global hard asset dominance. And we're just at the early days of that. And that's going to continue for the next 10 years or so.
Yeah. My view is...
This is very esoteric. Sorry, guys.
No. My view is it's a weakening of U.S. hegemony. You have more regionalization. I totally buy that argument. But you framed it as the end of American exceptionalism. And I fail to see a country out there that can truly rival the United States in terms of its relative power. I could see regional blocks, of course, but they're not one country, entities.
Jeff, to the two charts that you threw up there, as far as gold outperforming, call it the S&P.
Mm-hmm.
I think that I would agree with that. I don't know how long it runs though, before kind of this whole AI, I think everything's getting rewired for levels of efficiency that we can't even comprehend. So I don't understand how long that would run, but I think in the coming 5 years, I think you're going to be right about that. On the second one, I mean, the chart that Joe threw up there was amazing, and it was showing that there has been no trend line that has broken with respect to the U.S. economy getting weaker versus relatively everybody else. So you might,
but that was since 2011. That only went back to 2011.
No, I know that, but I'm saying right now, as we're looking at it, I'm looking at that trend. I'm saying that has definitely not been broken in any type of average true range or any type of momentum metric that you want to use. You know, I think it's yet to be seen whether your thesis, the second thesis there is demonstrating any type of performance or validity.
Yeah. So a couple points I'll just throw out there and then I'll stop. I think that the amount of debasement that's going to happen in the U.S. as we deglobalize and ramp up manufacturing here is going to be like, it's the nothing stops this train. It's legit. And we are going to debase the crap out of our currency. And that's going to cause the globe to lose confidence in US dollars relatively, not completely. I'm not saying hyperinflation. I'm not one of those people. I'm saying, relatively speaking, we're going to increase the pace of people losing confidence in the dollar. The dollar is going to weaken. Treasuries, and on an inflation adjusted term, are going to get absolutely decimated. The amount of money we have to spend to do the things that we're going to do are just going to cause a huge amount of debasement. And to your point, Preston, I think, yes, we haven't seen a definitive change yet, but if you look back just year to date, emerging markets, European stocks, Asian stocks have all significantly outperformed US stocks to date, as has gold. And I think what I'm saying is this is the beginning. 6 months, a trend does not make, but I think we're going to be talking about this 5 years from now and even 10 years from now. Yeah. And we're going to look back at this as this was the pivot period right around this time.
The only thing I'll say is that the debasement of the dollar, letting the economy run hot, It's a coordinated strategy to manage U.S. debt.
Yes.
And to me, long run, if you use that strategy, you're going to hurt your people. You're going to make the cost of living increase. It's going to have very pernicious effects for society, potentially societal instability. But it makes your debt situation far more manageable.
Yeah.
Which means that the plates can keep spinning in the air.
And so I'm agreeing with you. And I'm saying that's what we're going to do. And that's why this is why this is going to, because smart people and nations are realizing this and they're going to pull their capital out and let us we're going to inflate our debt away and get our debt to GDP under control.
Yeah.
But nobody's going to want to own our assets because of that, is my point. So Americans were like the 70s, they're going to think they're doing okay, but they're actually going to get decimated in risk-adjusted returns. Real returns, inflation-adjusted returns.
I threw up this chart real fast to talk because we've been mentioning gold quite a bit during the conversation. And I think this chart is totally...
This is an amazing chart. I think about this chart all the time.
Based on the trend line. Like,
as you lie awake at night, you think about this chart.
I do. I literally do. Because it looks like the Weimar chart, right?
It's crazy. For people that are just listening, we're showing all of the gold ETP, the ETFs, and all that stuff that's holding gold, the performance, and mostly just the total value if you add it all up relative to the Bitcoin vehicles, that the ETFs and the IBITs and all that kind of stuff. And what you see is this chart where Bitcoin is just like a rocket ship quickly approaching the levels that the gold value is at. Whether the trend continues, who knows? I mean, we're hardcore Bitcoiners. We think it is. But if you interpolate some of these lines out, it's getting really interesting here in the coming 5 years. Like, really interesting. Yeah. I don't know. I find the whole pivot with Tether doing tokenizing gold really interesting. Really interesting.
I think it's going to catch on, personally.
Why would anyone want to own gold, though? Why would you want to own gold? Is it because you're too stupid to understand Bitcoin, or?
Absolutely. Well, I think most people
why?
are older. They understand gold. They understand the dollar, and that's the end of their level of thinking and caring about any of this stuff.
It's for the boomers and some Gen Xers, but yeah.
And
millennials.
People just want to
hold most of the
join a
gold.
political party and then just blame the other side for all the woes in their life. And it's the end of the analysis. Like, that's where 90% of the population.
A friend told me this thing today that I've been chewing on ever since, where he said, when you grow up and you become incurious, all kids are curious, and then you become incurious, you stop having a true false framework run in your head and you start having an us-them framework run in your head.
Huh.
I think that's what it is. Bitcoin people are people who are searching for truth, and everybody else is us versus them.
Yeah, I would agree with that. All right. Any other topics? You guys are satisfied? It's all that preparation.
No, we have to give the red meat to the audience. So we have to talk about price, right? Going forward here.
Okay.
Jeff is very bullish. I think everybody's bullish on this podcast. Where do we see this going? Do we think it's going to stair step up, crawl higher through the end of the year? Do we expect any pullbacks during the fall? I know we've kind of alluded to it going higher next year. I think that's generally the consensus view of the panel here. Let's see if we're right about that. Where are we at in Christmas time? When's our next? This is our Q2 or Q3? I forgot. This is Q2?
Both.
I think I'm staring at this chart. I think I'm a power law believer. Look at it. It looks real. I'm in. Power law, babe. No, I think that the most likely thing is that we get this Q2 26 expansion. I agree with Jeff. I think that's sort of like a consensus view at the moment amongst Bitcoiners who've been here for a while. But again, we could easily go into, I don't know, man. It's so hard to pick because it's like we could get the diminished returns narrative where we go to like 180 and then we, go have a 50% correction or something, or we could just keep going. So I'm going to go, here's my prediction. My prediction is going to be, I think that the bull run is going to go on for 4 years. I'm just going to go out there. I haven't heard other people saying this.
Wow.
I think we're going from here to 2028. I think it takes us beyond $1 million. I think it's on the back of this .com style Bitcoin Treasury company bubble. And I think that there will be probably a lull period in there, or 1 or 2 lull periods where, it climbs up, it grabs onto an all-time high, and then we have a 30, 40, 50% correction. There's a lull. But in the meantime, the treasury companies keep going, hockey sticking up and to the right. Because if you check bitcointreasuries.com, NVK's site, every week there are more and more and more treasury companies, and they are not going to stop being added. And every single person I was talking to in Las Vegas was telling me that they were gearing up to start a treasury company. And again, a lot of these people are rank amateur who have no clue what they're doing. And there are podcasters on the board. By the way, are you guys on any boards you're not telling me about? But like, you can't, the excesses are going to be there. The leverage is going to be there. The amateurs are going to do all the wrong things, and we're going to get this collapse. Yes. But this idea is so big. This narrative is so big. It can carry us through. And I think there's an inherent reflexivity here to this big idea that now everybody has figured out, which is like, yes, Bitcoin is going to millions. I mean, just think about it. Just take a step back here. Just pause for a second and think to yourself, the president of the United States believes that Bitcoin is going to millions of dollars. The Treasury Secretary believes that. Okay. Elon Musk, the richest man in the world, believes that and thinks fiat money is hopeless. We all believe that, right? Your friend who you met at the bar for drinks when Bitcoin crossed $100,000, he now believes that. Everyone believes, Wall Street believes, everyone believes, China believes it. Everyone believes it. Okay. And the only logical thing to do when everybody believes in a big new idea, whether it's AI or the internet or Bitcoin, is to have a super massive .com style bubble about the whole thing. So I think that's what's going to happen. And I think it's going to take us to the $1 million range over the course of 3-4 years.
I appreciate that narrative response. But we're looking for a number of the price prediction by the end of the year.
For the end of the year.
It's like when I'm taking a deposition, nobody answers the question. What is the price at the end of the year?
At the end of this year?
Yes, 2025.
Like 160. Pretty low.
Wow.
Yeah.
Jeff?
I will be watching closely what the economy is doing and what leverage is doing. And if they're both ripping, I think Bitcoin could go very high by the end of the year.
I thought we were going to 400. Isn't that still happening?
475K has been my call based on past cycles. But the economy is so weird right now. Like we talked about, it's been muddling along since 2022. So I'm still waiting for the economy to pick up. So I use that as my excuse. First of all, I'm planning on being wrong with that call, but so many people have used it as clickbait on their YouTube thing. So I feel like it's like tattooed on my forehead. I think that we're going to extend. I don't know if we go 3 or 4 years like HODL says, but I think we at least extend into the second quarter of 2026 now. That just kind of changes everything. So if maybe we hockey stick in the second quarter of 2026, then I would actually have a higher price target. So here's what I'll say. If we hockey stick, if the economy is booming in the second quarter of 2026, then I'll raise my price target to 525,000.
Preston, what's the target?
I bought some options today.
Oh, man.
And
Nice.
I priced, when I was looking at what I think the conservative estimate of where it's going to be by the end of the year, because normally when I buy an option, I always do 2 years. I always give myself enough runway. But these ones I bought are due in January. And I don't want to say too much because I don't want people
To all follow you into the trade, get wrecked.
following.
No. I'm kidding.
But I bought these. They're out of the money by a decent amount. Like they're pretty levered. But got the timeline, so they come due in January of 2026. And I was using a base Bitcoin price of about 160, 170 for like a planning factor of like where I thought the underlying was going to go when I priced them. Do I think it can go more than that? I do think it can go more than that. But I guess I felt pretty confident that we could get to those price levels by, call it Christmas of this year. So
Definitely.
we'll see if I'm right. I mean, if not, it's going to be a painful situation, but I obviously didn't do it with a whole lot of capital. This is not a very high conviction position. This is like ashtray money. I'm going to have a little fun money.
I'd take that bet though, Preston. I think that's a good one.
So we'll see.
What about you, Joe?
I've had
By
the
the way-
same target all year. It's
Hold on,
publicly.
Joe, this is important.
What's that?
I bought it this morning and it closed the day up 20%.
See?
Nice.
Huge.
Nailed it.
So we'll see tomorrow. It'll be down 30%. Go ahead, Joe.
I've had the same target all year. I think we end the year between 130 and 140, but I also think we go a lot higher next year because, to your point, I think the economy is going to heat up. Before we go, real quick, can we do like a lightning round? I want like 3 things, 3 answers very quickly. It can be yes, no. Number 1, HODL and everybody. Does Powell finish his term? Number 2, answer
No.
about do we get any rate cuts this year? And number
No.
3, no, sorry, what was that?
No and no. I'm no and no.
No rate cuts the entire year. Okay.
Okay.
And then the third one, which is just kind of for fun. do we get any other major piece of legislation out of the administration this year?
Also, no. I'm going no across the board. No, no.
What do you mean by major?
Well, I wouldn't consider
like
this
the Bitcoin Act or something?
like a Strategic Reserve Act, something Cynthia Lummis, anything. We were talking about these things getting passed, and anything major on the Bitcoin front other than the stablecoin, which is not really Bitcoin, but
Okay.
you know my point. So
I'll
those
take
three,
the-
go ahead,
I'll
Jeff.
take the exact opposite of HODL. Yes, yes, and yes. And number 4, I think the 4 of us should start a Mastermind Treasury company. Jump on board with everybody.
Absolutely.
Let's go.
You
I
think
thought about-
Powell's done? Hey, hang on a second. You think Powell gets out this year? You think he's out?
No, HODL said that.
Yeah, there's a lot of talk about him resigning.
Oh, I'm sorry.
Rumors.
Yes.
A lot
You
of
think
I'm
rumors.
he's
saying-
gone?
I think
Okay.
he stays.
Powell's pretty stubborn, but there's a lot of pressure politically, so I'm not
I think
sure.
he stays, and I think we get rate cuts. And I think we pass major legislation.
What piece of legislation do you think
I
we
don't know,
get?
something major,
Okay.
something awesome.
So I don't
Okay,
think,
Preston,
I
go.
don't think Powell's going anywhere. And if true, then I don't think we're going to get any rate cuts. And I think they are going to pass the Bitcoin Act.
Ooh,
Wow.
they did.
That's huge. Well,
That's crazy
I don't-
price.
I mean, I guess it's more me just being optimistic because I honestly don't have a beat or have even heard a rumor as to what the probability on that is. I'm actually really curious what you think on that one, Joe.
yeah, again, that's one of those things where I really wish we would get it through. It's just going to be challenging. I think that they used up a lot of political capital on this big, beautiful bill, and I just think it's going to be hard to get anything through the Congress. And you got to remember with the window, basically, once you get into the fall, there's the holidays, there's not a whole lot of work going, and then boom, we're into midterm elections. And there's going to be I expect a very heated midterm election. I think, and not to get into some of the recent headlines the last 48 hours here, but even it seems like conservatives and people in the MAGA world are upset and frustrated. We'll see how that pans out.
Do you think
The Epstein stuff.
Elon's new party is going to actually be a thing, or is this just all talk?
I think it's all talk. It could, and the simple reason is this: there aren't national elections. There are 435 congressional districts, right, that have local elections, and you got to get on the ballots in those specific areas. And to get on as a third party, the system is rigged to prevent that. It's so difficult. I mean, some congressional districts you have to get like between 5 to 10% of registered voters in the actual district to get on the ballot. They make it prohibitive so that third parties can't. This is the big secret, right? Like the two-party monopoly is built at the state and local level so people can't get on the ballot. In some ways, the easiest office to run for as a third party is the president. Aside from that, it's very challenging. And then to coordinate candidates all across the whole country in individual congressional districts, it's going to be very difficult. Now, can he recruit a handful of people to go after some of his enemies on the Hill? Yeah, absolutely. He can do that, and I expect him to do that, right? But the notion that's going to be in the majority of the congressional districts, I just don't see it.
Interesting.
Just
what's your response, Joe? What's your response?
So I think that Powell's not going anywhere. I completely agree with that. I do think we get a rate cut for two simple reasons. Number one, the reason we thought that he ostensibly was not going to do rate cuts was because he wanted to wait and see, in his own words, about the tariffs. So that's a huge reason, right? We waited and see. We haven't seen inflation manifest itself yet to a degree that would cause him to hold back on the rate cuts. But the bigger reason is he's an institutionalist, and I think he's being attacked. And the only way to ease off that pressure is to do the cut. So I don't think a 25 bip cut, a face-saving cut, is going to amount to a hill of anything. I don't think it changes really anything in the real economy. But it's very easy for him to take the heat off him politically, because if he doesn't, he's going to face this shadow-fed chair that they're dangling over him, like this chair waiting. I think all of this is, again, posturing to try to get him to do some modest face-saving cut, and then they're hoping the entire yield curve reacts to it. That's a hope and a prayer. I don't know. I don't think it will, given the state of the economy, but it is what it is.
my one thought, Joe, to your midterm election being contentious is I would say a booming economy covers a multitude of sins. And so if they can truly get it
100%.
up and running by then, which I actually think there's a good chance that they do finally, that could sway the elections pretty significantly, I think.
Completely agree. And that's what the strategy is.
So we'll
That's
see.
why they're pounding the table on cuts. They're pounding the table on
Exactly.
all this stuff.
Yep, I agree.
All right, gentlemen. What a pleasure. I look forward to the next one. Thank you for always making time. Let's go around the horn, starting off with Jeff. Give people a handoff where they can learn more about you.
First of all, Preston, I want to thank you for preparing for this so hard and being ready for it when
Disaster.
it was awesome. Ad lib. I run a little friends and family hedge fund, and that's about it. Go touch grass. And
Cool.
you should follow HODL, Joe, and Preston. Don't follow me.
We'll have a link in the show notes to
There you go.
Jeff's.
Oh, hey, I'm sorry. Can I say one more thing?
Yeah.
Public service announcement. I am not on any other social media, and I know you guys probably have this problem too. If you see anybody that looks like me on anywhere on social media other than Nostr, it is not me. So do not click any links. Don't send anybody any money. Please don't do that. It's an imposter. Thank you.
Joe?
Joe Carlasare. I'm at Joe Carlasare on Twitter, where I'm quite active talking about financial things. I do have a day job that I work as a litigator. So if you have a litigated dispute, please contact me. If I can't help you, someone else will. We handle representation for a variety of Bitcoin miners, complex commercial disputes, fraud claims, some securities work, and really anything in the courtroom litigation. We do have a regulatory practice for crypto businesses, Bitcoin businesses as well. I look forward to trying to help you if you do. If you're an innovator in the space, definitely reach out because I'd like to help.
Best lawyer in America, right there. HODL, go ahead.
I don't have anything to shill. I don't care if you follow me, but these homies of mine on Nostr, they make this ghee called Great Ghee. Check it out. It says, highest quality animal fat for the hardest money on earth.
Nice.
And it's made from raw Jersey cow milk. It's I can't swear on Preston show. It's really delicious. It's really good. So you can only buy it on Nostr. It's a Nostr only business. Check them out. Great ghee, everybody. Available on Nostr.
All right,
Best show.
Gentlemen, really appreciate your time. This is always such a pleasure, and I really do look forward to the next one. So thank you, guys.
Thanks, Preston.
Thanks for
Preston.
having me, man.
The United States has a strategic fund of Bitcoin. That narrative is incredibly valuable. We got Bitcoin that's sitting on their books, right? That is already appreciated, a lot of it that has been seized. And you're going to tell you, we're not going to sell this into the market. We're just going to hold it. That's massively bullish.